Hi, I'm Max Keiser. Welcome to the Keiser Report. German people, I told you to hang on to your gold. Yes, it all started back in March 17 of 2008. Bear Stearns had collapsed that weekend. Ben Bernanke had slashed rates by 75 basis points on Sunday night. And on Monday morning, I had arrived at the Bundesbank to speak to their head of the gold department about Gordon Brown's bottom. Stacy, tell us the rest of this story.
Brown's bottom is not the physical bottom, but the bottom in the gold price. It's like a several hundred-year bottom in the price, and that's when Gordon Brown decided to sell off half his gold supply. So we went to Germany to ask the Bundesbank why they kept their gold in order to highlight why Britain would get rid of their gold. Little did we know that that weekend the financial crisis would really start in earnest. It went down so hard. And what you found was that they were panicked that the financial markets themselves would not survive. They said this to you, we had it on tape. And the other thing you said was, well, surely you're glad that you have so much gold. Can I see it? And they said, no, it's all in New York.
And since that time, there's been a growing movement in Germany to try to figure out where the gold is. Germans are concerned now that the global financial crisis is entering into its end game of sovereign bond blow-off, and the only thing left will be gold. People in Germany want to know, well, is 60% of their gold actually held out of Germany? Are we really that exposed to this downturn?
Sure, and it also shows how long these financial and currency wars go on. I mean, everybody always looks for an immediate win, like that decisive outcome right then. But this is like 4 years ago that we were there. And GATA, the Gold Antitrust Action Committee, has really been pursuing this doggedly. But I want to also flash back to a little video we made at that time to just show you how little understanding there was in Germany of actually where their gold supplies were.
Germany, German people, I say, Alan Greenspan and Ben Bernanke want you to swap your valuable gold for U.S. Treasury bonds and U.S. dollars that are entirely worthless. Don't do it, German people. Hold on to your gold. Gold has value. The U.S. dollar has no value. It's the devil's currency. Hold on to your gold, German people.
So as you saw from that video, there was nobody there in the audience. That's in the middle and the heart of Frankfurt. And today, however, look at the headline, Max. German court demands Bundesbank audit sovereign gold holdings. So the German Court of Auditors, the Bundesrechnungshof, has demanded that the Bundesbank undertake an audit of its gold reserves. In an audit, the Fed-style effort, the court wants to ensure that the nearly 3,400 tons of gold is in fact in existence because stocks have never been checked for authenticity or weight. That's according to the Bundesbank. What they told the court is they've never felt it necessary to actually audit the gold, even check that it's there, because they trust the Bank of England, the U.S. Federal Reserve Bank in New York, and the Bank of France, where all their gold is.
Right, well, the Bank of England and the New York Fed have been lending that gold out to support the rehypothecation schemes that created the multi-$100 trillion bubble. So I think Germany will be shocked to find out that their gold doesn't exist anymore. They're going to have to buy it in the open market, and as they do so, they'll spike the prices to even higher prices. The central banks have been buying gold now for several years when we started telling them to buy central banks. To buy gold, and as a result, they're causing their own demise, because as they realize they don't have enough gold to survive, and they have to buy it in the open market, they're going to force the price back up to that $10,000 an ounce level that is our target.
And now, back then in 2008, when you were there in the center of Frankfurt, telling the people that they should hang on to their gold, of course, everybody assumed that they had gold. They thought they had the shorts on out in the ocean and the tide has gone out, which is the financial crisis. And the Germans found out that they actually don't have all that gold that they felt so secure holding.
Well, just like the German banks got hoodwinked by Wall Street by selling them junk bonds that Moody's and S&P had given AAA ratings to. That was a scam. That was a scheme to defraud German banks. The German people, however, have a tremendous sense of guilt. So they didn't focus on this. They didn't want to rekindle the whole 60 years worth of German bashing. So they allowed themselves to be sold toxic sludge from Wall Street. Wall Street, of course, played on this. They gave junk bonds AAA rating. They ended up in the Bundesbank and Frankfurt and German banks and European banks. Now, to add insult to injury, Wall Street is saying, you don't have your gold either. So, Germany, I know you've been quiet for a number of decades, but maybe it's time to think self-preservation.
Well, I think they're putting their toe in the water of self-preservation, because this story then goes on to say the decision means negotiating with 3 foreign central banks for physical verification. But in anticipation, the Bundesbank has begun the process of shipping 50 tons per year from the Fed back to Germany for the next 3 years.
Well, that means nothing. I mean, they're going to buy gold in the open market. As long as they don't have to disclose hundreds of tons, thousands of tons, they'll happily buy it in the open market and ship it off and say, oh, here it is. There's no audit trail. There's no standard for accounting. There's no bar number, gold bar. There's nothing. It's just a hodgepodge of non-accountability. It's similar to what we've seen in the banking system for the past few years. There's no accountability. There's no chain of ownership. It's just gold that they're going to try to buy in the open market. They'll end up buying it from some poor Indian people. The Indian population has 18,000 tons of gold. It's the biggest gold hoard in the world. The Indians are set to inherit the earth as soon as the U.S. bubble and bonds and UK gilt market implodes. Even Mervyn King today in the paper said that the UK bond market is set to implode, and every central bank in the world is buying gold to hedge themselves against this sovereign bond collapse. Sovereign bonds are trading at a 250-year high. It's a bigger bubble than the Tulip Bull bubble. It's a bigger bubble than the South Sea bubble. Central banks are buying gold. Germany's saying, oh my God, what about our gold? And Wall Street is saying, we sold you junk, rated AAA, and we told you your gold is safe, but it's not. Germany, boy, you're getting screwed, buddy.
Well, you did say that the Germans are filled with guilt. I think when they come to audit their gold supplies here in the UK at the Bank of England, they'll find a safe deposit box filled with gilts.
That's right. They're replacing their guilt with gilts. Here you go. Here's a UK gilt. Oh, by the way, the price is crashing. Oh, well, here's an IOU for worthless paper. Goodbye, Fritz. Have a nice day. Say goodbye to Jeremy Clarkson on your way out. He's a big lover of the Germans, isn't he?
Well, speaking of coming to London to look for their gold, the next headline, Max, more on the German gold reserves controversy. Where is the gold? So this is Jesse's Cafe Americain covering this story. He's covered some of the stuff we've already looked at. But then at the end, he talks about the latest from GATA. GATA has noticed, the Gold Antitrust Action Committee in America, they've noticed that there's been some sales of gold, of German gold, allegedly, from London. And so the fact that they actually haven't made an official announcement about this, they say, means that the lack of announcement of the sale of the German gold in London suggests that the sale was actually part of a gold swap with another central bank, like the New York Fed.
Of course, the UK has been selling German gold to offset all of the losses we see in the UK banking system. The London whale, they lost billions of pounds. Then you had the MF Global, remember? Jamie Dimon at JP Morgan stole $1 billion directly out of customer accounts. How do you make whole on those stolen funds? Well, let's sell some gold. Gold has intrinsic value. There's always a market price for gold. Nobody doesn't accept gold. It's been that way for 5,000 years. Now the Germans are, it's really, I think, going to be a shock that they're going to reinflame the antagonisms from 1930 through 1940, but it's in keeping now with this World War III scenario, which is the currency war.
So with this story about the gold being sold out from London, now remember, the courts have now ordered the Bundesbank to conduct an audit. So GATA says the powerful implication here is that German gold in London was sold at the behest of the United States, and in exchange, Germany took title to United States gold vaulted in the United States. This way, the Bundesbank could continue to claim ownership of the same amount of gold without lying, at least not technically. So again, this is that whole rehypothecation that you talk about. And London, of course, is a place where they're allowed to rehypothecate infinitely. So in fact, German gold held in England, even though it's probably smaller in terms of the quantity compared to the US Federal Reserve Bank of New York, is probably rehypothecated so much times over.
Well, this is why the UK economy is at risk of imploding. That's why we do our show in the UK. We do the show in London because we want a front row seat and watch the City of London collapse. They have the lowest stockpile of gold as a relative to percentage to GDP of any of the G20 nations. Gordon Brown foolishly sold half their gold at a 100-year low. And now that the sovereign banks around the world are buying gold and the sovereign bond market's topping out, getting ready to crash, then the UK is at risk. The British pound is already crashed against gold and silver. How badly will it crash going forward? A lot worse. That's why we're here, to watch the carnage behind me in London, to bring it to you, the viewer, around the world. Germans, if you're upset by how badly the U.S. and London has screwed you, at least watch this show, because we'll try to get some retribution, as David Cameron will call it in his speech, why he should bash a hoodie. Oh, David, you're so bad. Why'd you swing your purse at them? Oh, I'm so frightened from David Cameron. He's seeking retribution. Oh, I'm so scared. Go back to eating, buddy. Get some of that, backstall shower pleasure. Let's be frank about it. I mean, you know the deal there. And that's why they run such an ineffective government, isn't it?
Well, back to Brown's bottom. And
yeah, see what I'm talking about? Here in London, you always see parades of people bicycling with their bottoms flashing out. What's Pippa Middleton, the royal heiress contingent person? What everyone talks about, her bottom. What are these folks from Eton, whether it's Cameron or his little coterie friends? Their bottoms. They're fixated on their bottoms. No wonder the country's going into the toilet, because they can't stop focusing on their bottoms. I'll tell you, a bottom in gold has been reached, and we're heading to $10,000 an ounce on gold. That's the only bottom you need to worry about. Okay, get your finger out of your bottom and focus on your economy, Osborne, you cushy little Eton mess, gorging slime bucket.
Okay, let's finish this last headline here. So when we were there in Germany at the Bundesbank, we did mention a quote from Alan Greenspan regarding Brown's bottom, i.e. he's selling half of Britain's gold supply. He said that it was basically, I'm paraphrasing, that it was a stupid idea because in extremis, as Germany learned during World War II, is that the only currency you can use, always, is gold. So it was dumb to get rid of it. And this is one of the things why we said all individuals should own gold or silver in this currency war time, because IMF's epic plan to conjure away debt and dethrone bankers. So there is a magic wand after all. A revolutionary paper by the International Monetary Fund claims that one can eliminate the net public debt of the U.S. at a stroke and by implication do the same for Britain, Germany, Italy, or Japan. The conjuring trick is to replace our system of private bank-created money, roughly 97% of the money supply, with state-created money. We return to the historical norm before Charles II placed control of the money supply in private hands with the English Free Coinage Act of 1666.
Yeah, and if my sister had a she'd be my brother. All right, Stacy Herbert, thanks for being on the Keiser Report.
Thank you, Max.
Stay tuned for the second half. I'll be speaking with Goldbug and author Dominic Frisby. Yes, that's his actual name. Welcome back to the Keiser Report. I'm Max Keiser. Time now to turn to Dominic Frisby, resident Goldbug at Money Week and author of the new book, Life After the State. Dominic, welcome to the Keiser Report.
Thank you very much, Max. Pleasure to be back.
All right, Dominic Frisby, we're talking about Germany. Now, how significant is the German court order demanding that the Bundesbank audit Germany's gold holdings?
Well, we don't know how significant it is because we don't know if the gold holdings will actually be audited. But the big suspicion is that there is a double entry on that gold, that the gold has been leased out to somebody else. And we will never know the truth.
But Dominic, isn't that suspicion warranted given this recent history of the MF Global scandal, where collateral was rehypothecated, where the whole derivatives market, where we find that collateral is being loaned out hundreds of times again? Why not? Why wouldn't Germany's gold be loaned out a few times?
Well, exactly, why wouldn't it? And it would be no surprise if it is. You know, that gold has never been properly audited. That's what's so amazing about this revelation. It has never been audited. And then you go one stage further, and then you think the American gold, despite repeated claims, now America is of course the world's biggest gold holder with 260 million ounces, that gold hasn't been audited in in over 50 years. And every time attempts have been made to audit it, what always happens is we'll give you a little bit and you can audit that.
That's what they're saying this time.
Yeah, absolutely. And, you know, that's a hell of a lot of gold. 100 million ounces, or in the case of America, 260 million ounces. That would take a heck of a lot of auditing. But given the importance of those gold reserves, you just think it would happen. And all we have at the moment is the assurances of central bankers, which are, to coin a phrase, only worth the paper that they're written on.
Right. Now, gold is becoming hugely important now because there's two flights of quality going on in the world today. People who are frightened by this financial collapse and the geopolitical unrest, they're moving either into bonds, and they're also moving to some degree into gold. Now, bonds are trading at a close to 250-year high.
Bonds, the government bonds is the mother of all bubbles, and there's so much money waiting on the sidelines, waiting to pile into a short on government bonds. When that one goes belly up, you know, that's properly, you know, run to the hills, take your tins, take your guns and put your crash helmet on.
Right, and meantime, the central banks themselves are buying gold. The same banks are issuing all these bonds. Even though there's a record supply of bonds, the bonds are still hitting highs.
Yeah.
Whereas gold is a limited supply, and we've seen a bull market certainly, but it hasn't really reflected the collapse of the bond market.
Well, if you look at the ratio of gold to government debt or to government balance sheets, gold hasn't been in a bull market at all. It's been totally flat. It's, I mean, obviously it's risen in currency terms, but the ratio of gold to government debt is flat.
Right, so as the gold price has been moving up, governments have been issuing more debt.
Yeah.
So, in fact, you could say the bull market in gold relative to bond market hasn't really even started yet.
You certainly could say that.
And historically, we know that bull markets go in phases, and we're at maybe a phase one is finished, where there's been accumulation.
If you have three phases to a bull market, the stealth phase, the awareness phase, and the blow-off stage, I would say we are midway through stage two.
So you're in front of people as a performer, as a writer. You know, you're a Renaissance man, Dominic. So what about the people? You say it's not a secret, but then again, less than 2% of investable assets around the world.
I went to a conference last week. Bill Bonner and Mark Farber both spoke at the conference, the Halkin conference. You know, it was full of hardcore Austrian economists, sound money bugs, libertarians, those kind of people, maybe 150, 200. Mark Farber said to the audience, who here owns gold? And I would say 3/4 of the audience put their hands up. And then the chair, Bob Cato, turned around and said, okay, who has more than 5% of their net worth in gold, excluding ETFs? And only 20% of the room put their hands up. And that was, maybe even less than 20%. And that is hardcore gold bugs. That isn't Joe Public. And so, you know, gold, physical gold, is still under-owned.
Okay, so to explain ETF, Exchange Traded Fund, it's a proxy for gold. It tracks the price of gold. Some would argue that it's paper gold. And in some cases, like the one with the GLD ticker symbol in New York, it's not really gold at all. Whereas the ones in Canada, or Eric Sprott's, has an ETF, which is the physical bullion, so one must be aware of what's going on. But your point is well taken, that even amongst the hardcore professionals, the ownership at more than 5% of the actual stuff, not the paper stuff, is low. Now, spread across the entire economy and global investors...
Can I interrupt you just for 1 second?
Please do, yes.
Let's say that Germany's gold isn't there.
Yes.
Then suddenly, and then you know that it's been leased out to someone else. The implications of that are... because suddenly Germany, the second biggest economy or third biggest economy on the planet, doesn't have gold. What value then does its currency have? The implications, and then what happens between relations between Germany and the US?
I think what you're alluding to here is the old animosities between Germany, the rest of Europe, America, seem to be increasing around a theme some call World War III, the currency war. Your thoughts?
I don't think there's going to be a war between Germany and America, but, you know, economic crises usually end in a war of some kind. And the big issue is it going to be between China and the States? Is it going to be between the Muslim world and the, you know, it could be any...
Yeah, but what if the Treasury here in the UK, when Germany comes for their gold, gives them instead a bunch of gilts? Or IOU and say, well, we don't have the gold, but here's some bonds. Well, I mean, Germany, they're not wimps.
Well, I imagine the reaction of central banks in that case would be immediately to take those gilts, sell them, and buy gold on the in the market. But that's going to dramatically push the gold price up.
Right,
it's interesting, by the way, the gilts actually means gold.
Yeah. Interesting, ironic, tragic.
Yeah.
You be the judge. All right, so another big player in the gold market is China. They have, ostensibly, according to the latest reports, 1,000 tons or so. They built that up from 500 tons in a pretty rapid amount of time. They're also the biggest miner of gold, and they keep all the mine domestically. Rumor is, maybe you heard some inside scoop on this, that they're out there around the world secretly hoarding gold, and to make another surprise announcement soon that they've taken that 1,000 ton position to 2 or even higher 1,000 tons. What do you hear?
Well, it's certainly, China is the world's biggest gold producer. I had dinner about a year or two ago with the head of gold at HSBC, and one of the things that he described, and most of the world's gold goes through HSBC at some stage, and one of the things he described looking at the gold in his vaults is despite the fact that China is the biggest producer, he never sees bars with Chinese stamps on it. In other words, China is hoarding all their own gold. They do not export any of it. And, the implications of that, every few years China makes an announcement about how much gold it has, and I think the next time they make that announcement is going to be considerably higher than the amount they have now. I also hearing rumours about African Barrick having trouble with their mines in Africa, and the Chinese making plays on African Barrick, huge gold producer.
Oh, so it's American Barrick's African subsidiary. I would imagine. African
Barrick Gold spun out its African assets into a separate company, which is African Barrick.
Okay. It's either Canadian or American Barrick.
Canadian.
It's Canadian, okay.
Yeah.
So, well, this is an interesting situation because you have, as I said at the top of the interview, people who are frightened by the geopolitics of our era, who are frightened by the financial crisis, are running to two places, bonds and to some degree gold. But these are two diametrically opposite investments in a lot of ways.
They are.
So somebody's going to be the huge loser and somebody's going to be an enormous winner. I think we can clearly see. Why is it are people so, they assume that bonds, let me ask you this question, they assume that bonds are safe. They don't understand that bonds are as risky as anything else. Why did you write for Money Week? Money Week is kind of, it goes to the mid-market, right? It's not meant to the professional.
Well, it's pretty contrary, but yeah, it is. It is aimed at it's aimed at people who have money but don't necessarily work in finance.
Okay, so these people, even of that caliber of sophistication, which is above the average, they still don't get this idea, for the most part, that bonds are as risky as anything else, given fluctuations in interest rates.
Well, I mean, the good thing about Money Week is it does try to put all the different points of view across, and there are some writers who write for Money Week, James Ferguson, who's been very pro-government bonds, and there are other writers, myself included, who have said avoid them. Now, up to now, James Ferguson's call's been right and mine's been wrong, but I still maintain that when this bond market, I think it's an artificial market. Central banks are printing money to buy their own government bonds. The UK, the Bank of England makes up now something like 50% of the buyers of UK bonds. Now, that's an artificial market. The Bank of England has become the market. And if there was an actual genuine market for government bonds, then yields would be considerably higher. And but this artificial market has created a situation where governments don't have to make the cuts that they have to make, instead, because they're able to sell their debt cheap. So governments have continue to expand when they should be cutting, and the market can stay irrational a lot longer than you can stay solvent, to misquote Keynes. But the point is, when this goes, I just think, hide.
Dominic Frisby, you've also written a book. Tell us about it.
Yes, I have got a book out. I'm funding it with a new publisher called Unbound. It's a book calling very much for change. I try to explain the economic crisis and the drivers of the economic crisis, but I've found alternative explanations. I place the entire blame for this economic crisis and the bloated financial sector and the bloated government sector, I see it as entirely a consequence of our flawed system of money. And so I try and explain the economic crisis in these terms. I'm trying to do what Malcolm Gladwell, who wrote Outliers, did for his subjects. I'm trying to do a similar thing about economics and about this financial crisis. And and I offer solutions. Now, I should say, another book explaining the economic crisis, oh no. But my background is as a comedian. And when you when you're on stage as a comic, if you say things that people don't understand, they don't laugh. So it makes you obsessed with clarity. And one of the problems I think the financial sector as a whole has is this use of language that people just don't understand. And so I've taken great pains to write this in a totally comprehensible way. And, you know, every time I write something for Money Week, I try and write something that I think even my mother would understand. She's my kind of target, if you like. So one of the great efforts of this book has been to put it all in a language that people can follow.
Isn't your mom a bookmaker at Ladbrokes?
No, she's a gold bug.
Dominic Frisby, thanks so much for being on the Keiser Report.
My pleasure, Max. Thank you.
All right, and that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I want to thank my guest, Dominic Frisby. If you want to send me an email, please do so at keiserreport@rttv.ru. Until next time, Max Keiser saying bye, y'all.
In order to highlight why Britain would get rid of their gold. Little did we know that that weekend the financial crisis would really start in earnest. It went down so hard. And what you found was that they were panicked that the financial markets themselves would not survive. They said this to you, we had it on tape. And the other thing you said was, well, surely you're glad that you have so much gold. Can I see it? And they said, no, it's all in New York.
And since that time, there's been a growing movement in Germany to try to figure out where the gold is. Germans are concerned now that the global financial crisis is entering into its end game of sovereign bond blow-off, and the only thing left will be gold. People in Germany want to know, well, is 60% of their gold
ever been checked for authenticity or weight? That's according to the Bundesbank. What they told the court is they've never felt it necessary to actually audit the gold, even check that it's there, because they trust the Bank of England, the U.S. Federal Reserve Bank in New York, and the Bank of France, where all their gold is.
Right, well, the Bank of England and the New York Fed have been lending that gold out to support the rehypothecation schemes that created the multi-$100 trillion bubble. So I think Germany will be shocked to find out that their gold doesn't exist anymore. They're going to have to buy it in the open market, and as they do so, they'll spike the prices to even higher prices. The central banks have been buying gold now for several years when we started telling them to buy central banks, to buy gold, and actually held out of Germany. Are we really that exposed to this downturn?
Sure, and it also shows how long these financial and currency wars go on. I mean, everybody always looks for an immediate win, like that decisive outcome right then. But this is like 4 years ago that we were there. And GATA, the Gold Antitrust Action Committee, has really been pursuing this doggedly. But I want to also flash back to a little video we made at that time to just show you how little understanding there was in Germany of actually where their gold supplies were.
Germany, German people, I say. Alan Greenspan and Ben Bernanke want you to swap your valuable gold for U.S. Treasury bonds and U.S. dollars that are entirely worthless. Don't do it, German people. Hold on to your gold. Gold has value. The U.S. dollar has no value. It's the devil's currency. Hold on to your gold, German people.
So as you saw from that video, there was nobody there in the audience. That's in the middle and the heart of Frankfurt. And today, however, look at the headline, Max. German court demands Bundesbank audit sovereign gold holdings. So the German Court of Auditors, the Bundesrechnungshof, has demanded that the Bundesbank undertake an audit of its gold reserves. In an audit, the Fed-style effort, the court wants to ensure that the nearly 3,400 tons of gold is in fact in existence because stocks have never...
Hi, I'm Max Keiser. Welcome to the Keiser Report. German people, I told you to hang on to your gold. Yes, it all started back in March 17 of 2008. Bear Stearns had collapsed that weekend. Ben Bernanke had slashed rates by 75 basis points on Sunday night. And on Monday morning, I had arrived at the Bundesbank to speak to their head of the gold department about Gordon Brown's bottom. Stacy, tell us the rest of this story.
Brown's bottom is not the physical bottom, but the bottom in the gold price. It's like a several hundred-year bottom in the price, and that's when Gordon Brown decided to sell off half his gold supply. So we went to Germany to ask the Bundesbank why they kept their gold.